All right, and we should be live. Hey, everyone. Welcome to another episode of Market Pulse or Trading Bitcoin. I'm doing both now in the mornings. And today's going to be an interesting day. We're watching the market and the Bitcoin pump this morning from about 30 minutes ago when not the unemployment claims, but the job report, the filing claims came out this morning. And the market is really popping as of that news. We're going to go and take a look at that. Let me pull out your live chat, even though I probably will not have time for questions, but I will go ahead and grab that live chat and set up the environment. And then we go straight to screen share. Pop out chat, close that. We will do this. And this, and we are good to go. All right, let's go to screen share. Boom, that's Bitcoin on a monthly chart. Not much is changing, but we are price flipping on a monthly chart. If we can hold this and then next month get a green 2 above a green 1, that once again, it gets me pretty damn bullish. All right, here's the weekly chart. This is the really important one. We are making a green candle. We are breaking an area of resistance. This is a green 1 according to sequential. And next week, if we can go above that candle, that makes me very bullish. However, I have to, be realistic about the fact that even though sequential is telling you that is your long trade, you have to realize that in order to activate that long trade, Bitcoin literally had to go up 100%. And that's not where I like to enter my trades, which is why I started entering my Bitcoin positions way earlier, because I saw this as capitulation. So I still think there's going to be some pullbacks here, but I don't, the worst case scenario, we're going to go back to the 200-week moving average, but this 200-week moving average is starting to rise very quickly at this point. So if I do this from this candle and I go back 200 bars, oh wow, that takes me quite a bit actually back, right? If I go back 200 bars, oh wow, I have to go way back. Let me see. Boom. Okay, 200 bars. Now I got to do this. So look where we are. Crap. Let's try this again. 200 bars back. Wow, perfect. Okay, so we are replacing these candles with these candles. So we're replacing these closes down here. See, prior to recently, I've noticed that the 200-week moving average is starting to rise fairly quickly. And that's because the 200-week moving average has been dealing with 6 months of consolidation in the $400 range. But right now, we're breaking out of that. So that is being reflected in the 200-week moving average. And once we break out of this area, so in about another 6 months, we're going to start to rise very quickly on this. And we're going to take all of this out of the average. So it is going to start to go up fairly quickly, which is good because it gives us a chance to break out. I do think we will hit this 200-week moving average one more time, probably sometime at the end of the year, and it's going to be around current prices. I do want to get to the stock market because it's popping. So Bitcoin was dropping this morning. This was probably my best guess. This is the low half an hour ago because the stock market was looking like it's going to puke out a lung this morning. So if I go straight to the 4-hour chart, yeah, that was the low. That was the low half an hour ago. So that purely shows you that there is still lots of correlation between the stock market and Bitcoin. Like this morning, when I looked at my phone and I saw Bitcoin around 7,100, I kind of knew that that means that the stock market was going to open very, very poorly. And then the stock market started to pop. You can see it here in S&P. The stock market started to pop 30 minutes ago, exactly 30 minutes ago. If I go to the 10-minute candle, you can see the big pop in the stock market with the job report right there, with the job numbers. Right here, the stock market pops. It was looking like it was going to open 30 points down. Right here, it was even more than that. So last night's close was here, and you were looking at 30, almost 40 points down, and that's what it was looking like going into the job report. This is where the job report comes out, and the market pops an unreasonable amount. I don't know if this will last. I have absolutely no idea. This is why market opens and going into market opens are so unpredictable. We have literally just made a new high from what was looking like going to be a potentially disastrous day has just turned into a huge pop in the market. Now, once again, I am positioned to the short side of the market at the moment. So I was kind of happy 30 minutes ago, and now I'm not. My positions, I was looking to exit I don't want to have any positions going into this long weekend. And ideally, I would like to exit those positions with a profit, not with a loss. And I was, my portfolio was leaning short going into yesterday's market. So I probably would have needed us to fall down to the 2680 area today in order to get out of the market with a profit. Obviously, even here at this open, I would have still been losing on well, yeah, I probably would have been having a losing week in the market because I was positioned for this week being a down week, not an up week. So that's okay. You're not going to have every positive week in your trading. But this run up is not something I was expecting nor saw. And the job numbers didn't beat. The job numbers missed. So I'm not sure I get this pump. But hey, this is why trading is unpredictable and your portfolio should be hedged. All right, let's get back to Bitcoin. We will also glance at gold. I still have about 15 minutes before I get ready for market open. Yes, guys, I don't use wedges. I don't use wedges. I don't like wedges. I'm not going to look at wedges. Like there's other ways of trading, and I use those. And there was a big OPEC meeting, so we'll see how that ends. So since there is a big OPEC meeting, let's look at oil. We will see. We will see if they agree on oil production cuts. If they do, the price of oil will probably rise. I missed my oil trade, but I am in a stock trade on oil, which is profitable. So that stock is definitely doing well with the pump in the market. But that was a longer term play. That wasn't a short term play. That one I am going to hold through the weekend and through the month and into the summer. Okay, let's go back to Bitcoin. So here we are. The market's pumping, so Bitcoin recovered. Now, Bitcoin has its own set of resistance here. We have a pretty nasty trend line. Let me draw that in. I'm not going to leave it there, but we have a pretty nasty trend line. It depends on how you draw it. You know, I can draw it like this. We have a pretty nasty trend line. We have the moving average. We have the sequential 9. I mean, I've seen other people draw other reasons for why we're right at resistance. And I agree. Bitcoin has gone up quite a bit, and it needs a little bit of a pullback. But I think the pullback is not going to be that bad. I've been waiting for the stock market to go down and go down hard. Clearly, it is doing the complete opposite, and it's just still pumping and pumping higher. I don't know if today is going to reverse. I don't know if we're going to hit that 10 a.m. mark and then go straight down. I would personally like to see that, only because of my positions in the market, because I expected a bearish week. But that's pretty much the only reason. Other than that, I like seeing the market go up. I would rather have the stock market recover and go to new all-time highs, and me lose some money in my portfolio versus having riots on the street with every business failing. So I will take a better economy over my short-term returns any day of the week. My portfolio will certainly do fine. And I'd like to start traveling again. So if this coronavirus ends, I would get back to my life. That's a massive pump. I did not expect that, especially when those numbers came out. Because look, we can see it. If I go to FinWiz, which is like my just a quick go-to for the numbers. So if we look at it, if we look at the jobs, yeah, see expected continuing claims. We were expecting 5 million and we got 6.6 million. So we missed it by like 20%. So I honestly have no idea. I just don't understand how the stock market pumps on the news that the numbers miss. Right. I guess PPI didn't miss. That one was better at minus 0.2 instead of minus 0.4. And but the core PPI did better, expected minus 0.1. They got 0.2. But the initial claims, that's the big one. That's the big one. And that was bad. That was a bad number. All right, so you want me to answer what I think about the modern monetary theory in the next 5 minutes? Yeah, not going to happen. Okay. So what do we do at this point? The market is pumping. I'm not going to do anything. I do not trade in the first 15 to 30 minutes of trading. I let the market do its thing, okay? I let it pick a direction. Now, sometimes that fails me because I was long on Tuesday. Yeah, I was long going into Tuesday, and this was the opening minute of the market. We went up for about 2 minutes and then went back down. And then right here, it was looking like we were still going to go higher, and we didn't, and went down. So, and I was long, but I didn't cut my longs until this area here. And this is where I anticipated everything else to just go down. And obviously that did not happen. And now we're sitting here at brand new highs. So now we're going to go to the daily chart, and we're going to look where we are from a daily perspective. Well, from a daily perspective, we have hit that Fibonacci that I expected us to hit on Tuesday. We finally did it. Let me get rid of this arrow because it's in the way. So we finally made it to that level where I initially anticipated us to top. Now, based on the action on Tuesday, I had assumed this is where we topped, but I was always going to give it some leeway. Even with my shorts on the table, I was going to give it some leeway to potentially get to that level. And the days have been very, very volatile. So there's still a chance we could go all the way down and close halfway down the candle, but trading isn't about praying, right? So I will do the usual. I will give the market up to 30 minutes to make up its mind. And if it's still pumping after 10 a.m., I will just have to take the loss. But if it reverses at 10 a.m., I will let the reversal play out, because it's possible that this reversal in the afternoon could be massive, as people don't want to hold through a 3-day weekend with so much uncertainty with the virus. This has now went into the 50-period moving average. I will say 50% Fibonacci. I will say that the 50% Fibonacci is not my favorite Fibonacci to reverse prices. The 38% is my favorite Fibonacci to reverse prices. Then comes the 62% Fibonacci to reverse prices. But when an asset rebounds to the 62% Fibonacci, I no longer expect that asset to go to new lows. Once an asset goes to the 62% Fibonacci, I now only anticipate it to pull back to the 38% Fibonacci, and that's it. Then find support there and then challenge new highs. So if we break the 50% barrier and this rebound does make it to this 62%, I will no longer anticipate lower stock market prices. I will be somewhat bullish in the market. So my mind will completely change from where I was a week ago, anticipating lower lows. I will completely flip to being a bull, and I could still be wrong. We could still go to new lows, right? But as far as where I'm anticipating the market to be, once we hit this 62% Fibonacci, I will only anticipate a pullback as far down as the 38, then a rebound, then eventually a break of the 62. If we break this 62 for the second time, sometime going into the summer, I will be very, very bullish. And at current speed, damn, we can challenge new all-time highs by end of year. And that will sure and hell be something. I mean, it'll definitely blow a gasket in gloom and doomers. That's for damn sure. All right, what else we got? Hey guys, if you like these videos, please support through the affiliate code program. Also, there seems to be lots of interest again for the options webinar. It's the only one I'm probably going to teach based on how much interest there is. And there's no workshops coming soon. Sorry, webinars. Oh, there's no webinars coming soon. Sorry, on-demand videos. And the options webinar, I will be teaching it again. Probably this weekend. I'm gonna. It takes me time. I want to redo. I want to make it better. I've taught this twice. I want to do a better job. I want to be way more prepared. So I'll take this weekend. I'm gonna redo some of the slides. I'm gonna prepare for it, and maybe I'll teach it earlier than later. Maybe I'll teach it in, say, sometime in May. We'll see, while everyone's home. I might make it 3 days because I really want that weekday in there for people to see live price action. So we'll think of something. It's not going to be cheap because if you can't afford a $3,000 options trading course, you shouldn't be trading options. They are very risky and very dangerous. So I don't feel bad at all for charging a ridiculous amount of money. It's a filter. All right. So where are we? Also the financial summit is still planned for November, especially if the market is recovering. That means people are optimistic and this coronavirus is not scaring them anymore. So the stocks pumping makes me very optimistic that there will be absolutely no problem with the Bali event happening in November, or even understanding Bitcoin happening in October. I mean, not everyone will be traveling. People will still be scared, but there shouldn't be any problems with traveling by then. And the stock market is a good barometer of that for me personally. Oh, gold. Gold's pumping as well. And look at that. So I've been bullish gold, and gold's also somewhat correlated with the market. And yeah, so I am looking for gold to challenge the highs. This is an inverse head and shoulders to me that is playing out. So I have been bullish on gold, and obviously silver is probably pumping as well. And there it is. Okay, not as much as gold, but still going high. Okay, guys, I'm gonna have to leave it here. We will see if the market pulls all the way back today. Today's a big day. Tomorrow's a holiday. It gives me a break from trading, so that's good. I have 4 minutes left. Am I out of tequila yet? No, but I'm gonna be out of I don't want to say cheap tequila, but I'm going to be out of the añejo soon, and I'm going to have to move on to the extra añejo, which is kind of expensive, and I like to save for special occasions. But if I run out of so there's you have the silver, you have the reposado, you have the añejo, and you have the extra añejo. So if I run out of the second best, I'm going to have to move on. Sorry, if I move out of second to best, I'm gonna have to move on to the best, which is what I don't want to do. So I'm still looking for a Bitcoin pullback. I don't know why. I've been already talking about Bitcoin enough. I'm still looking for a Bitcoin pullback below 7,000 and then a rise. And I'm looking for the same thing in the stock market. I'm still looking for a pullback in the stock market. This has, we went up a lot and I am looking for a pullback. Okay. Though the sequential is telling me to just stay long. So trusting the sequential would have been the smarter move here than going with the Fibonacci resistance lines. All right, guys. I'm going to go ahead and end it here. And I will see you all on the next one, guys.